Okay, Chapter 7, a course is still Principles of Accounting. First part, Chapter 7 is about the accounting information system. What consists, what the requirements, what has to have, and what we can do with it. Accounting information system is the place that we're gonna put all the available information, not only accounting information, any information related to our sales, our purchases, our assets, our liability, revenue, expenses, customers, vendors, everything on all in one place. Now, what is needed for this accounting information to be, accounting system to be effective? Well, obviously, it has to be able to capture all the data and all the activity of organization, which again, we're going to start with the sales first, since we know that the only way that you to generate cash from the company is to achieve sales. So the sales will be the first one. When we're selling that inventory, we're going to have the receipts from the customers, approval for great sales, check availability of the inventory, shipment, processing sales invoices, getting the cash from the payments from the sales that we just made. So anything related to the selling of what we have for the sales in our company. Then the next stage will be before we sell something, obviously we have to have it, so we have to capture all the information related to the purchases of the goods and the services we just sold. So we're going to have requests for the purchase, approval for the vendor, receipt for the goods service, processing the vendor invoice, payment for the goods and services. As you probably guessing, before we choose somebody as a vendor, we have to go through the approval process. So all this information will be placed on one place, and that will be in the accounting system. And of course, if we're providing service, we need people to work, and that will be our payroll. If we obviously producing the finished goods, we also need people to work. So again, that's a payroll again. So for that payroll, we need to capture information about approving the new employees, collecting of the time records, preparation of payments and payroll taxes. So all those activities have to be captured by the accounting system. So in order that system to be effective, it has to have some features, which features will be control, compatibility, flexibility, be able to provide reports which meeting the user's needs, and have to provide more benefits than the system cost itself. Control, what do we need to control? Because usually we're forgetting where we're going. So for that reason, we need to put control procedures in place to make sure that we're going to achieve what we want to achieve. But once we achieve it, we're going to protect it. So internal control, that will be the methods and procedures which you use to authorize the transactions. Now, when we have everything in accounting information system, we want to authorize those transactions. So only people, the people who enter in the transactions, those transactions has to be approved by somebody. That will help us to follow the management policy that was chosen by the management. Help us to safeguard the assets and the records, having in mind that now the most significant asset in the company most likely will be the records of the company. Prevent and detect the error, and for all, we always want to be on the prevention side and detection side rather than the fixing side. Provide security by limiting access to the assets and the records. So by doing that, we make sure that only people who are authorized have access to the assets and the records. And ensure that the information which is kept in the accounting software is relevant, accurate, and on time. Comparability is this accounting software system should work smoothly with the business operation, with the personnel, and with the organizational structure. So it can be easy comparable for all those different aspects of our organization. Flexibility means to organize when the organization involves the accounting information system to be able to satisfy the new needs for the expansion of the company or changing in the business or changing the part of the business into another business. So the system needs to accommodate all the changes without needing to change the system. The other features are to meet the user needs for the reporting purposes. So every software is going to give you a set of reports, but usually those set of reports is not what we want to see. So the system itself, it has to be able to be adjusted to provide the reports that we want to see, not what the system gives us. Again, once we have all the information in one place, it should be fairly easy with to extract exact information that we need and present it in the form and report which is going to help us. What the system can do and cannot do, that is irrelevant. More relevant is, can the system accommodate our needs? In most systems, they can, and they should. Now, the fact that the system doesn't provide exactly what you need, it doesn't change the fact the system can produce it. Most likely, there's nobody who knows how to adjust the system to provide a report that you want to see. And in everything in life, we have to chase the positive cost benefit analysis, means the benefits always have to be more than the cost. Otherwise, that information system will be waste of money. Components of the computerized accounting system, that will be two components. We're going to have the hardware and we're going to have the software. What's interesting with the hardware and software, hardware cannot live without software. And vice versa, software cannot, it can exist without the hardware, but cannot work without the hardware. So if you have the installation for Android system, but you don't have a cell phone, then that software that you have is pretty much useless. So you need both components. You need the hardware and you need the software. So you need the cell phone and you need the Android system, because if you only have the cell phone, again, it's useless. You have to install some software in the cell phone in order that hardware cell phone to become useful. So the hardware is the electronic equipment in form of the computer system, network, link between the computers, or communication between the server, if you have server, and the computer. What the software is the system of different programs which provides the necessary functions which can perform the desired outcome. We have, for the component of the computer, we have a cloud computing, which is the third party, store the business information. As I said in the group today, I was listening on the way to Douglas College this morning, some interesting on CBC radio that they're talking about storage and cloud systems. And apparently there is no provider on the market right now which storage is physically located in Canada. So all the big providers, their storage facility are in US, which creates a problem with the authorities, so with the ownership of the information, with the access of the information, and the information can be extracted from that kind of cloud system. Because regardless if it's when you put it in the clouds, yes, it's technically your information, but it's not. On whoever server is that, information. That's who is the owner of the information. My friend had to figure out this in the hard way. She was running public practice and she was using Google for backup her all the information. And at some point, she has a crash and she went back to the backup and Google tell her, no, you cannot have access to it. And she said, how cannot have access when we sign the contract and this and this? Yes, but it's our information, not your information. Now you have to prove that you is you, and it's prove that this is actually your information, and they make it very hard on her to prove that this is actually her information, and took her probably a few days until she get the information back. And since then, she's not keeping that information on Google server anymore. But that's always happen when you have interesting experience with the provider, then you're realizing that you need more reliable third party to store your information. Personnel is the personnel who's going to be operating the system. Obviously, that personnel has to be appropriately trained in order you to have success of the using, implementing, and extracting information from that accounting information system. Now, which are the element of the computerized manual accounting, computerized manual accounting system? Both have to have input. Input is the process when somebody entering the information inside the system. For the make the initial input, we have to have original document from what happened in the company and what transactions are involved. For that reason, we're going to have different source of documents. The one will be the invoices, order received from the customer, sales receipts, bank deposit slips, contracts can drive input in the system if we're running a budget system, and if we're running the project costing, we need to enter the original amount for the budgeting for that project, but that will be on the input. And once we start billing and everything, we're going to start entering those sales invoices. Once we receive the money from the customer, that will be sales receipts, bank information, bank deposit slip when it comes. That information is going to be entered. Processing in the manual system will be journalizing, posting, preparing financial statements, where the computerized system will be the posting and report preparation. But now, as you can see, in the manual system, to some extent, we have to manually prepare some set of reports, which later they can update itself if using, for example, Excel spreadsheet. And some of those Excel spreadsheets that I posted earlier, when you enter information on one of the worksheets, then automatically update the following worksheets. But again, manually, you have to be monitoring the Excel spreadsheet to make sure that they're actually producing the correct financial statements. Where the computerized system, everything is set up, and all the posting and reports preparation will be automatic based on the outline or based on the requirements of the person who's going to use those reports. And the last one is the inputs, outputs. Outputs will be the report which is used for decision making under both systems, and including financial statements. On the financial statements, we already figured out that first thing that we need is the income statement, so we can see the ability of company to generate income. Second, we want to see when the company generates the income, where that income is, and how much of that income belongs to the owners. So that's why we have to prepare the statement of owner's equity. And once we're done with the statement of owner's equity, we want to see where actually is that equity and of the assets that the company has, how much exactly is the equity. It might be 100%. If the company don't have liability, it's going to be 100%, which is very rare case. So the good system obviously is going to provide better reports for the customer needs. But again, every good system comes with a good price. Now the question is how much you're willing to pay to see a report, which it may be good, it may be not so good, but again, everything comes with the benefit, cost and benefit analysis. How are we going to design this accounting system? Well, in the design of accounting system, everything starts with the chart of accounts and the list of those accounts. I had very interesting conversation on my way to Toronto for this conference for Pearson for the artificial intelligence with the gentleman sitting next to me who's treasury of some uh, non-for-profit organization. And he was telling me that his accountant tell him that there's no way he to get some information inside. And the first thing that I ask him is, can I see your chart of account? If the chart of account is not organized in the proper way to collect the information in a certain way, then there's no way you to extract that information. And that's why everything is very important in the beginning when you set up the customer, not the customer, the company, you to have idea what you're doing. Second, you to set up the proper chart of accounts for the company, which is going to serve as a future guidance and future development of the business. Every chart of accounts, as we already know, the number will be numbers, which every number is going to present a count. And based on the starting number of each number, we're going to identify is the account asset, liability, equity, revenue, expenses. And we already established that every account that starts with number one, that belongs to the asset. Two, liability. Three, owner's equity. Four, revenue. Five, six, seven, eight, expenses. So the simple structure will look like this. We already know one is for asset, and then we're going to have accounts, which will be current assets, property, plant, equipment, other assets. But those are, as you can see, those are more like a subheading of certain categories. And under the current assets, we're going to see now we have a cash, we have accounts receivables, I have inventory. Now, accounts receivables, that's a compound account, if we can say that, compound account of many other accounts. Which will be those accounts? Those will be actual customers' accounts. And as you can see, once we set up the accounts receivables, depends on the which accounts receivable. As you can see, the number here is 115, and then we have 00001 for customer, starting with that. So it's important when you set up the system, you to think about the future of the company and think about how big the business might go. In the beginning, it seems that it might not go too big, but you never know. So for that reason, you as an architect, if you can put it this way, in the business, you have to have ability to foresee the future or plan for the future. So for example, if I use 115 for accounts receivables and then I put 01 is my first customer, then automatically I limit myself to only 9 customers because technically my customers can be from number 01 all the way to number 9. And once I reach 9, I'm out of customers. Actually, that will be to 99. So maximum customers, I can have 99 customers. If I start, let's say, in this case, I start with, the other option is to start with 115,001, but then I'm limit myself from 0.1 to 999 customers. And I cannot go anywhere further. That will be 301, and then I'm limit myself to 999. As you can see, this company, they are, if the starting customer is 0001, then their capacity will be 9999 customers. So they can have maximum of 9,999 customers in their system, which is kind of give you the flexibility. So same thing will be applicable for accounts payable if you want. So give yourself, when you set up the E, if you ever have to do the setup of accounting system, think about the future and make it easy so you don't have to at some point to create account, which is accounts receivable, but to be 116. Why? Because the original account 115 don't have the capacity to hold at least, let's say, 10,000 customers. Once we do this, we have to understand that this accounting, either manual or manual-driven accounting system, is going to have subcategories, which separate subcategories is going to help us to navigate and enter information. Here, what I can show you is, just give me a second and I'll show you something interesting. I remember that I have here something on my computer where I'm working right now. So as you can see, for different activities, we're going to use the different part of the accounting software. Depends on what we need. In this case here, if you have a, let's say, credit sales, the credit sales is going to be recorded in the sales journal. If we have purchase on account, that's going to be recorded in the purchase journal. If we're receiving cash from the sales that we already made, that will be the cash receipt journal. If we're paying cash for the purchase that we already made, that will go to the cash payment journal. If it's something not related to any of those four, it's going to be for the general journal. Directly goes there. So how the system is going to look like. Now, before I would be able to show you, but luckily I have something which can help you to understand it. For example, let me stop sharing here and share my screen. So this is accounting software, very simple accounting software, as you can see on my screen, which have a different modules. It has receivables, it has payables, it has inventory, it has project, it has banking, it has company, all the different things. So the thing is, if you need to enter something in the receivables, you have to go through the sales invoice. You may have a sales quote or sales order. Those can match each other, but then you have to go to the sales invoice. When you're entering sales invoice, the only thing that you're doing is you're entering, let me see if I open this window, you're going to see something like this, which look like a sales invoice, and that sales invoice is going to give you ability only to choose the customer and to do debit accounts receivables, credits revenue, or sales. Debit accounts receivable, credit sales. Debit accounts receivable, credit sales. And that's all. Once you're done with entering the sales, then you might have collect the cash from the sales. When you collect the cash, you're going to open this and you're going to start cleaning the cash that you have collected. But in this receipt journal, as you can see, this receipt journal, let me see if you can see it. Yeah, you can see it. That receipt journal is going to do only accounts receivable, cash accounts receivable, cash accounts receivable, cash accounts receivable, no other transactions. For that extent, you're a little bit kind of not limited, but it's a little bit organized because again, sales invoice connecting, creating accounts receivables, you have ability on the credit side to enter something. On the receipt, you're closing accounts receivables, but you're entering cash. On the payables, if we go to payables here, on the payables, you're going to see different uh, purchase. And from the purchase invoice, when you go to the purchase invoice, you can enter actual the invoice for the purchases that you actually made. It doesn't let me stop sharing this with you and share the new one so you can see it. And it's gonna look like this, something like this. And now here from these purchases, I can enter any accounts payables. I have to choose the accounts payable, the vendor, and I'm entering the accounts payables. But again, that's going to create only liability for the accounts payables. And if I want to pay that particular accounts payable, then I have to go to the second module, which is called payments. And here under the payments, now I can start paying those accounts payables. In accounts payable journal, it's going to have only debit assets or expenses, credit accounts payable, and here you're going to have debit accounts payable, credit cash. And the next part will be the banking. On the banking, you can have a different here categories for the banking, and the company is going to give you the general journal. This is the general journal when we're going to enter anything else which is not related to sales, purchases, sales receipts, purchase payments. And from here, we can enter all that information. And that technically will be your accounting software, if you want to put it this way. Let's stop sharing this and let's go now to the next stage, which is here our main information. Again, those are the modules that I just show you. And in those modules, you can see the different categories and different which activity on which format they're gonna go. So again, we're chasing that the sales journals gonna dealing only with the sales on credit. Purchase journal only is gonna deal with the purchase and credit. Now, it says credit, but in reality, all the sales are going through the sales journal and all the purchases going through the purchase journal. Even if you receive the cash right away, you're still going to the sales journal and purchase journal in order you to keep track of the vendors and the customers that you're dealing with. Then you're going to have a cash receipt journal and cash payment journal. Again, those are directly related to the only cash received or cash paid. And then we have the general journal, which is not dealing with anything else. Enterprise resource system is the complicated system that including not only the accounting, but everything else in the company. On one place, integrate all the company data, company information, and the enterprise system example can be SAP, can be Oracle, JD Edwards. Enterprise resource system can be Sage 300. Sage 50 is just a basic accounting software, but if you go with Sage 300, that's a enterprise resource planning system, which gives you ability to and the different places to do different information. So that will fit the company into one single software, which software we're going to have extra information about the customers, vendors, purchases, sales, payments, everything. What's the advantages if we have this enterprise resource planning system is we're going to save money eventually, but the only downside is it's very costly. Yes, you're going to save money, but you have to spend a lot of money. Usually it's like that. If you spend a lot of money, then you can save money. It's going to help to adjust to changes in the company, changes to the operations, changes to the personnel. Everything is there and it's going to accommodate those changes. And the other thing is that if you're running if you need different softwares to achieve some activities, this system can implement itself all those softwares, different softwares. What's going to happen is if you do this system, then you're strictly 100% depending on the system. And if something goes wrong with that system and you don't have control of that system, you're losing everything. Or you have to start begging somebody to help you. Which one thing that from my experience I don't like. I don't like be dependent on things that I don't have control over. For example, that operating system, enterprise planning resource system, since it's not internally developed by the company, but is purchased from the third party, that third party is going to have now control over everything that you want to achieve. That's the downside when you have this system. Yes, it's very powerful. Yes, collecting all the information. Yes, gives you flexibility, helps you to adjust to the changes. Yes, replace all the softwares, but then become dependent. So how are we going to generalize in posting the transactions? Are we going to transactions which involve in the customers records? We're going to start with the sales, obviously, and for that we need the sales journal. And in manual system, if you're running manual system, we're going to have a special journal, which is accounting journal, which is designed to record all the specific time transactions. Now, most of the transactions going to follow one of those follow 5 categories. Those 5 categories will be tested on the final exam, just to let you know. You're going to have a transaction and you have to decide which one of those 5 categories that transaction should be recorded in. So, for example, transaction sales on account, it's going to go to the special journal, which is called sales journal. If we have a cash receipts, it's going to go to a special journal, which is called cash receipt journal. If we have transaction purchase on account, that go for the special journal, which is called purchase journal. Cash payments going to go to the cash payment journal. Anything other is going to go to the general journal. Now, how this going to work? When we're receiving cash, that's going to show in the bank account. From the bank account, from the bank statement, we're going to update the accounting software by posting transaction. Once we post that transaction, in the cash receipt journal, that's going to affect the accounts receivable. It's going to clear accounts receivable, and it's going to go to the general ledger directly into accounts cash. When we have sales, now for the sales, in order to do the sales, we need the inventory and we need to execute the sales. So that's first when we have sales, we're going to post it in the sales journal. In the sales journal, what's going to do? Going to update the inventory to reduce the inventory sold. It's going to update accounts receivables for the amount that the customer has to pay us, and it's going to update the general ledger for the revenue. Now, for the purchase invoices, it has to update accounts payable for the amount that we owe, inventory, which we purchase, so increase the inventory, increase in accounts payable, And directly, if it's related something to expenses, anything that's going to go directly to the general ledger. Checks, when we sign the check, so when we issue the check, that will be form of payment. So that is going to affect the cash. It's going to give effect the cash, and also is going to affect the accounts payable by reducing the accounts payable. Pero once we pay the employee, that's going to directly go to the general ledger to reduce the cash. And if we have anything else which doesn't involve the cash, we're directly going to post it to the general ledger so to can affect the accounts which are related to that specific transaction. So for the sales journal, we're going to see on different dates, different sales. Once we combine the sales, we're going to see how much is our cost of goods sold. We're going to see how much is the total accounts receivables. Why the total account receivable is $4,319 is because those $4,390 are from 1, 2, 3, 4 customers. When we combine all those 4 customers, we're going to get our accounts receivables. Now, accounts receivables, since this is our sales, most likely will correspond then directly to the sales that we made for that period. Once we start the subsidiary account, again, subsidiary account will be the file of separate accounts which are related to accounts receivable or accounts payable. What do we need to track? We need to track number of how many vendors we have, how many customers we have, the number of those one, number of transactions, day of the transactions, volume, how often they're purchasing, and everything. So after that, we can extract that information if we need it. So again, how we're going to balance the ledgers? All the sub accounts that we have under accounts receivable, as you can see, 115 was accounts receivable, and 009 is the one customer. Then, as you can see, this company limits itself to 999 customers. If they have 1,000 customers, they have to use different type of accounting. But anyway, all those when we combine all those customers, going to give us the number which is sitting on the general ledger as accounts receivables of $4,319. Once we start receiving the cash, once the client starts paying, we're going to increase our cash, and at the same time, we're going to start reducing the accounts receivables. And the new accounts receivables, as you can see here, is going to start climbing slowly. Why? Because it's going to flow to the cash as a debit. So all the accounts receivable that we receive on the credit side, it's going to be reduction, and it's going to show that we receive 1,235, which is 935 from this client and 300 from that client. The first client pay his outstanding balance and bring it to zero. The second client probably pay only one invoice and still more invoices to pay. So that's how we're gonna deal with accounts receivables and everything that is related to accounts receivable. That's how we're gonna adjust a single account to affect our subledger account. Subledger accounts actually is gonna read and gonna go to the ledger account. Now, once we're done with the sales and cash receipts, we have to start dealing with the purchases. And in the purchases, we're going to cap all the information, and we're going to get all the information from the purchase journal. And from the purchase journal, we're going to keep track of the inventory, of the supplies, of the services that we're purchasing, of any other assets which are related to the purchase. And once we do those purchases, we're going to post it on the general ledger, which will be similar to sales and sales receipts. So again, on the purchase journal, we're going to have different transactions from different vendors which we're purchasing. And once we do those purchasing, when we combine all the purchases and accounts payable that we have to clear or have outstanding, that's going to be equal to the accounts payable that we currently have open. So once I combine all those outstanding balances on accounts payable subledger, they're going to give me the balance of accounts payable on the general ledger. Then I'm going to start paying those accounts payable by issuing checks. Once I issue the check, that check is going to update the cash check register and the cash disbursement journal. And once we do that, all those payments that we're making to different vendors is going to update the accounts payable. And we're going to see that in this case here, the cash is going to go down. As accounts payable is going to go down and the cash is going to go down with the same amount. But that reduction in accounts payable is going to show us a reduction here on the subledger account. So as you can see, we have debit here on the subledger account of 119,700, total of 890, which is directly a reduction in our accounts payable. What we're going to do with the general journal. In the general journal, we're going to post everything which is not related again to sales, cash receipts, purchase, cash payment. So the role of the general journal again is to capture all the accounts needed general, and special journals save time to recording and posting the repetitive transactions. If you have something repetitive, we can use this general journal to just automatically to update the accounting system. And some transactions obviously is not going to fit anyway in the purchase, sales, cash receipts, and cash payments. Now, what most entity are recorded in general journal, those will be the returns and allowances for the merchandises. Adjustments, such as amortization, expiration of prepaid insurance, any recognizing of the deferred expenses, deferred revenue, or making general entry for the accruals for the expenses and for the revenues. So how we should look the accounting software system is going to be simple way to look at this will be follow the cash. How can we follow the cash? First question that we have to answer is, does the transaction involve cash? If the answer is yes, then we're moving to this part. Then we're going, did the company receive cash? Answer is yes. Yes, the company received cash. Then where are we going? Cash receipt journal. Did the company receive cash? No, company didn't receive cash, but cash is involved, so that means the company paid the cash. So then we're going to go to record of the cash payment journal. That's the options that we have if the cash is involved. Let's say cash is not involved. Then we're going to go and check, is this transaction sales on account? If it's not sales, we're going this direction. But if it's sales, then we're going recording sales journal. Let's say the transaction is no, it's not sales. Then we have to go and another last check is the transaction purchase on account? If the transaction purchase on account, then we're going to go to purchase journal. If it's not, then we're going to go to general journal, and that's where we're going to end up. So that's what's going to be tested again. On the final exam, you're going to have a different events and transactions, and you're going to have to identify this transaction where will be recorded. And as you can see, you have 1, 2, 3, 4, 5 options. Simple way is put it in this chart, and you're going to end up with the right answer. Have this chart available. It's already, this chart is available for you for the final exam questions set. So that's how it's going to help you to identify where certain transaction which journal or just journal, yeah, which journal that transaction has to be recorded in the accounting software system. So, how are we going to deal with the taxes in the accounting system where we have to record the taxes? What kind of taxes we have? We're going to collect and we have to pay the taxes. Every business is paying taxes and then collecting taxes. We're going to pay taxes every time when we're doing purchases, and we're going to collect taxes every time when we're doing sales. Which are the taxes that we usually are involved in the uh, day-to-day business besides income taxes? That's not part of this course, but the, the the taxes which are involved in our operation, which is purchasing sales, that will be federal goods and service taxes, also called GST, and provincial sales tax. That's one option you have. The other option that you're going to have will be harmonized sales taxes. Now, what's the harmonized sales taxes? Harmonized sales taxes combine those two together. If this is 1 and this is 2, then in harmonized taxes, you're going to have 1 plus 2 all together. In every province, we have the federal goods and service taxes. And in every province, we have provincial sales taxes. Now, some of the provinces decide to combine those two together, 1 and 2, and charge their population with only one tax, which is called harmonized sales tax. In BC, we also had harmonized taxes, so we're paying the GST and PST all together. So what's happened is in 2010, the HST was introduced in British Columbia, and 2013 we dropped it. That was like a 2 years period in which we have the HST harmonized taxes. So instead of paying GST and PST, both those are combined together. What was the downside of this is because if you pay close attention to some of the goods which are exempt from GST, we don't have to pay GST. Some of the items we have a zero GST, all goods and service taxes, so we also don't pay. Provincial taxes are paid on the goods when you purchase the goods. When we purchase services, there's no portion of provincial sales tax. So in British Columbia, as you already know, there's not much business which involved manufacturing and merchandising are part of the every society. So buying goods is part of society, but since most of the businesses just are in the service and they're service-oriented businesses, that increased the cost for their customers, and they start complaining. And the people suddenly start going to the restaurants. Why? Because before, when was the GST and PST, before 2010, when you go to the restaurant, you charge 5% for the goods and service taxes. After 2010, you charge 12% for the same food. So if you have to pay, if you have to buy 2 burgers, for example, for $10 from McDonald's, before 2010, you have to pay 5% GST. After 2010, you have to pay 12%. And the people start complaining. There was loss of business on the restaurants because the restaurants were affected mostly on the services that they're providing. their cost increased with 7% right away. And customers said, okay, so now before you charge me 5% for GST, that's fine, and I'm giving you a tip for 10%, so my increase of my food is 15%. Now you ask me 12% for the taxes, and you still expect me to pay you 10%, another on top of that, another 10% uh, for the tip. Now my costs become 22% higher than, or 7% higher than used to be. And because of all those, how can I say, specifics in the industry in British Columbia, that HST didn't last a long time. Only 2 years, and 2013 was scrapped. And we went back to the GST PST. So there are a few provinces in Canada which using GST and PST. Uh, I would say most of the provinces they already moved to HST or harmonized sales taxes, which combine both. And for some provinces, that harmonized tax is different than what we pay here in BC. And again, that harmonized taxes is applicable to everything. Where in BC, we are only paying the provincial taxes on the sales of goods. And that's with this chapter 7, and that concludes the chapter 7. So the essence of this chapter 7 is what the accounting system is consist of, what's the futures, what is consist of. We have hardware, software. What the accounting was the processes in accounting. We have input, we have processing, we have the output. How we organize the accounting system, or what's the most important in the accounting system. That's the chart of account or list of the old accounts in the general ledger, the account numbers. The processes or the journals that we have in the accounting system. Again, we have 5 journals: sales journal, purchase journal, cash receipt journal, cash payment journal, general journal. That will be the most important. And then you to understand that different transactions going to go to the different journal. How the system works is you have the general ledger account and subledger to that general ledger, which is give you analytical breakdown of amount of the accounts receivables or amount of the accounts payables, respectively. And the other thing is to know how to apply this chart. And that's your chapter 7. And I'm going to stop right here.